All right, guys and gals, time to get back to work here tonight. It's about that time of day again here, after all. It's Wednesday evening. It's May the 20th, 2020. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session. And I got a jam-packed video in store for you tonight. The charts are all prepped up in the background. As you can see, we got some oil, got the S&P, of course, and we'll finish up tonight on the yellow metal, the gold futures. Lots of spike and range patterns on the charts. Big moves today. But how we finish today's trading session is a big clue to plan for the best setups for tomorrow. We're going to break all this down in the video tonight. Before we jump in, though, and break all the setups down for tomorrow, I just want to remind you, make sure you subscribe to this YouTube channel. I don't want you to miss all the good stuff we publish every evening on this newsletter. So make sure you subscribe. And don't forget, if you have any questions about anything we talk about tonight on the video, drop those questions in the comment section below. And as always, if you guys and gals tune in every evening to watch this video, if you tune in every evening to get your mind right and get your charts right for tomorrow's trading session, hit that thumbs up button for me. I always appreciate you guys tuning in and showing the love by hitting that thumbs up button on our YouTube channel. Thank you so much for tuning in. But enough of the introduction here tonight. Time is ticking. Time is money. Let's jump into the calendar for tomorrow. We'll take a look at the calendar, take a look at what's on the schedule so we know what to be waiting for and what to be sitting on hands here for tomorrow's trading session. Jumping into the calendar here for tomorrow, of course, it's Thursday. It's May the 21st here tomorrow. You could easily argue tomorrow is the last full day of the week here. We got that holiday weekend coming up. In fact, the Security Information something consulting agency recommends that we close early on Friday, right? Not officially and close early, but it is a full trading day on Friday, but you got that Monday holiday, right? Next Monday is a very, very popular holiday here in the US. It's kind of known as the official kickoff of the summertime season. That is Memorial Day weekend. So a very, very popular holiday. Keep in mind, everyone here in the U.S., and I'm sure wherever you are tuning in right now, everyone's kind of emerging right now out of lockdown. So I wouldn't be surprised if there are quite a bit of shenanigans going on this holiday weekend. I can't say I might not be participating myself. So we definitely have some holiday weekends, some holiday festivities. That means Friday's probably going to be a little bit sluggish, right? Probably a half day on Friday. We'll talk more details about that in tomorrow night's newsletter. But the most important thing, though, is obviously we have a big day tomorrow. If you're a professional trader, if you work at a trading firm, tomorrow is the day. You've got to make it or break it tomorrow because you never know what you're going to get coming out of the gate on Friday, right? Friday could be a zero day for a lot of traders on Friday. It could also be a great day, and we'll be ready for that tomorrow, obviously. But the most important thing, though, tomorrow is there's definitely a sense of scarcity in the markets right now. You got a lot of FOMO in the markets right now, right? Markets clearly could feel the bullishness, oil rising, gold going soft, going sideways, and of course the S&P pushing hard here. It was easy to see that people were excited about the U.S. or the economy overall, the demand picking up for things like oil and heavy metals and things like that. So it's obvious to see that things are coming back to normal again, and that definitely is leading up to this kind of fear of missing out on the move back to the highs, missing out on the best moves, right? So we definitely know tomorrow is going to be a bit of some scarcity. I would imagine there'll be a sense of urgency in the markets here tomorrow. Looking at the news report tomorrow, you'll notice there's no shortage of news here. We get jobless claims, of course, which is normally not that big of a news report, but lately, because we've had something like 50, 60 million jobless claims benefits, reported, people have been watching that. Remember, though, when it comes to those jobless numbers, it's not the bad number that we care about. We know the number will be bad. Is it as bad as they were expecting? And is it as bad as last week, right? That's going to be the big comparison here tomorrow for jobless claims. You got that Philly Fed Business Outlook survey right there on top of it. So tomorrow morning at 8:30, we definitely have some pretty potent news reports coming out bright and early to kickstart our trading session. I'll definitely want to be at my desk tomorrow no later than 8 o'clock Eastern time, get the charts all prepped up, and be ready for battle tomorrow by 8:35. Later on in the session, we got some PMI. Anytime you see PMI, PPI, CPI, right? Anytime you see an index on there, you always know gold is going to be something to pay attention to. That is really important too, because it's right around that fixing time at 9:45. 10 o'clock Eastern is the gold fixing time, and 9:45, pretty good timing of that. So gold market tomorrow, I will certainly be watching gold and, of course, everything else tomorrow, because we definitely are expecting to see another big response to those home sales numbers. We heard from housing starts this week earlier on Tuesday. Again, very bad number, but was it worse than they expected? It was a lot worse than they expected. Will that number tomorrow, will that come out better than they are anticipating? Those are the numbers you want to keep your eyes on. Not is it a bad number, good or bad number, that's irrelevant right now. It is, are they expecting X and they get Y? What is the difference there? We'll talk more about that obviously tomorrow, right, in the trade room as we see these numbers coming out. And keep in mind too, I have no business in trading the news. I just simply know that if I had to guess, I would guess we're going to probably get some response around 8:30, between 8:30 and 9 o'clock, right? Definitely watching the gold, among other things, at 9:45. And I would imagine out of all of these setups, out of all the news events, I would imagine that the best kind of momentum plays, the best reversals, the best everything tomorrow will probably be in that 10:15 to 10:45 block tomorrow. So you definitely want to be at your desk in and around this big cluster of news. If I could only be at my desk tomorrow, it would definitely be around this existing home sales number. That would definitely, just because that's typically been when we've been seeing the most reliable moves. Obviously today was just a rocket ship going higher all day, right? So it didn't really matter what time of day it was today. But typically though, that 10:15 to 10:45 block is where we've been seeing most of the most reliable setups in our trade room. Now, there's also a lot of other things going on here for tomorrow. I don't need to remind you that the reopening of the economy is on everyone's minds, right? We've got a lot of states in the U.S. that have reopened, a lot of states that are still trying to keep people locked down. I live in one of them. And how that battle is playing out is definitely something to watch. We also know the tensions of the U.S. and China. We've been talking about this now for a couple of weeks. Today was I'm not sure if you saw the headlines today, but the back and forth we're seeing right now, it reminds me of 6 months ago. Right, when the bickering back and forth between the U.S. and China. But you know what the big difference was today, though? We heard the U.S. President Trump. We heard Xi. We heard everybody's going back and forth between the U.S. and China. What happened, though? The markets just kept on revving their engines. That, to me, was one of the biggest clues we saw today. It was not the fact that the U.S. and China were at each other's throats. We expect that right now, right? The blame game. What was really not surprising, but one very big difference from seeing the bickering today as to where it was at the end of last year. If there was even so much of a tweet last year that suggested there was some bickering going on, it was the end of the world, right? And the market would fall apart. Remember that last year, how horrible that was? How sensitive these markets were last year? You couldn't even tell. You couldn't even tell they were throwing daggers in each other's backs this morning in the news media. So very bullish, I would say. The fact that the markets were able to hold up through all of that just crappy and throwing back and forth each other. That's very a positive sign for things to come going forward. We continue to hear more about the stimulus packages. Obviously, stimulus is on everyone's minds right now. We heard from the Fed this afternoon. We talked about those Fed meeting minutes this afternoon. The big thing in the Fed meeting minutes was they have no problem putting together more stimulus packages. And remember, we are hearing more about vaccines right now. So we get one more big headline about a new vaccine coming out, and whoop, these things will start ripping again. So I'll tell you, a very exciting time to be a trader. Hopefully tomorrow we'll get something more than just a straight line higher like we saw today. But these are some of the threads that are kind of intertwined with these markets right now. We're waiting for updates on all of these here, and any of those could be a grenade that goes off in the market tomorrow. So we're definitely going to be watching closely. We'll keep our eyes open on the charts and the news events. Now, don't forget, I keep talking about tomorrow. Tomorrow morning and every morning we get together in our trade room and we do all of this together. The easiest way to learn this stuff is to come out and trade it with me. And of course, we open up our trade room every morning to our members at 8 o'clock Eastern time. I'd love to have you there with me. I'll put all the membership information for you guys inside the description of this YouTube video. So grab that link. If you're on the blog, I'll put it right below the video tonight on the trading blog. So feel free to grab that link. I would love to have you with us tomorrow and trade this strategy together. Now, speaking of the strategy, let's get this party going here tonight. Get some oil. We got the S&P, we got the gold. Boy, gold, I'll tell you, gold held strong today, right? We talked about gold last night. I think gold's setting up for a nice big move here for tomorrow. But I want to go to the most difficult market, I think, here right now, which is crude oil. I think oil's probably going to be, this is the one that we kind of have to wait and see. We really need a little bit more information on oil because as of right now, all we really know is we know we're bullish. And we know we're right at the retest of this high. Now, if you watch my newsletter, you probably know that anytime we have a strong move in one direction, we always expect to get that two-legged pullback and that retest of the high. Now, we're right at that high, right? And of course, my job as a trader is to buy on those pullbacks, right? That's my goal. When I see momentum being so strong for the bulls, I don't want to chase after that move. I want to wait for a nice, deep, juicy pullback that allows me to, of course, risk small to earn large, right? I know it's very popular these days to risk 3 to make 1, but you're not going to make much money in the long term doing that, going after 1 point and risking 4 or 5 points on some scalps every day. It's just, you probably have already learned, it's just not a very way to earn a sustainable income in the markets. You've got to wait for these opportunities here to risk small to earn large. So to kind of make my point here, the bottom line is we are right up at this high, and this is where I always ask myself, are we going to get acceptance? Or are we going to get rejection? And we haven't talked a lot about this lately on the newsletter. We haven't seen a lot of these scenarios lately. But when I have myself sitting right at this high right now, my big question is, do we get acceptance? Do we keep going? Right? Do we keep going up to another leg, maybe a measured move, right? Maybe a new channel here. Do we see, right? Do they accept those higher prices, or do the buyers reject those higher prices? Do we come down off of that high, right? Do we kick back off of that high? Does this thing turn now into a range? That's what usually happens, right? Bouncing around in the range. We start looking for that range low, or do we start seeing those reversals, right? Those 1s, those 2s, and those reversals, right? We'll talk about this obviously tonight on the video. Or do we see a complete reversal? Strong 1, 2, 3, and back down hunting for those lows. So as you can see, just by looking at the chart right now, I always try to give you guys as much concrete, information as possible. But we are sitting at a turning point or at a crossroads right now here on oil. We know we're bullish. You don't need me to tell you that. We know we're bullish right now. We know we got that two-legged pullback. The bears came in, tried to sell, and there's that low risk, high reward opportunity again, right? That's the good stuff right there that we're looking for as traders. Now at the time we're up at the highs here, and I'm thinking, okay, what's my job going to be now as we go higher? Like I said earlier, very strong momentum, very strong bullish sentiment in these markets right now as the reopening of the world comes back together again. It's crazy times we live in, and that's gonna produce, right, more bullishness here on the oil. We saw a beautiful bullish clue last night that really gave us a heads up of this big rally today. Will we see more of that for tomorrow? Will we see a breakout going higher? If we do see a breakout going higher, there's definitely 3 scenarios I want to be ready for. The big thing is I've got the high up here and the measured move is right there. So I really don't want to be buying into this area. We'll talk about being a seller here in a moment. But there are really a couple scenarios I want to look for. The big one, though, is we've got to get through this area. right? You'll notice what I've done here. I've kind of drawn out what might end up being a bit of a false top up there, right? There might be a trap waiting up there for those rookie buyers buying breakouts right now. So just be careful with that buy as we go. If we get rid of that, let's say, for example, we get rid of that channel. Can I bring that down here? Yeah, I'll bring that down like that. I'll put it back up here in a second. But imagine now we break through that area. We really got to get a strong breakout. I call that acceptance, right? So acceptance as we go higher. A couple things I'm watching for. One thing would be a strong spike up and then some sort of range up here. I'm definitely anticipating as this market gets higher, eventually buyers will stop wanting to buy high and they'll look for, right, some sort of way to buy low. If we do jump up and start going sideways here, maybe halfway up to that next measured move and that round number, we have to assume that's where these buyers want to go. If they do jump up into a range, I start looking to get long underneath that trading range using a very simple seller failure pattern, right? We'll wait for that pullback. I'll wait for those bears to try, and we'll simply buy into those stop losses. A very, very simple pattern. If a market jumps up and goes into a range, moving average starts coming over, right? We finally start seeing the buyers peel off that high. Once we peel off the high, now bears oftentimes get fooled into thinking this is a reversal. They commit on the pullback, and of course, we're buying right into those stop losses. That's a very reliable setup if we go higher into a range. Another possible scenario would be we pull back to the moving average and we blast. Right? That is very, very possible here right now. The fundamentals and technicals both looking very good. Now, we don't have any proof of this, so I can't buy that pullback, right? You buy that pullback, you're completely gambling. Maybe it pays off, maybe it doesn't. You probably have learned that lesson the hard way like I have before. But if we do see that jump off the moving average now, I can mark up that high, I can mark up that low, and what does that become? That becomes a new spike in channel. It becomes basically a 1, 2, 3 breakout into a channel pullback. That would be a very reliable setup as well. I'm watching here for tomorrow. And then if everything starts to click, right? If this thing starts to fire on all cylinders, really starts to blast higher here, right? We're not talking about a pullback and a go. It doesn't jump up and go sideways, right? It just rips as it goes higher. If it races higher, watch for that shallow pullback, that higher high. The giveaway is that shallow pullback and that higher high. If they get that shallow pullback and higher high, now we know traps are on our radar for what I call a two-try trap pattern, right? Two-try trap pattern. So a breakout into a range, a breakout into a channel, a breakout into a trap. You know, boy, talking about breakouts, breakouts are tricky because you can't predict them, right? I have a definite foolproof way of not falling for breakouts than just waiting for proof. Now, guys, don't forget, we'll qualify these breakouts tomorrow together in the trade room. But if you want a deeper dive into all my favorite breakout patterns, reversal patterns, pullbacks, and trap patterns, I'll put a link up here for the free trading classes here at School of Trade. You got to check out the free course. If you're not a member in the trade room, we'll do this obviously together tomorrow. You can look over my shoulder and do it with me tomorrow. If you're not a member though, make sure you grab that free trading course, learn my favorite setups, learn my favorite strategy. I'll send you hundreds of examples of how we apply that strategy to our favorite futures markets. And don't forget too, I'll put all the membership information for you guys in the description of that YouTube video. So now we know what a good plan looks like here as we go higher. I think the most difficult thing for tomorrow will be if we end up kind of sitting down in the middle here. And you'll see some examples of this on the S&P, right, and the gold. This could get a bit tricky here, right? So as we pull back on this, we may end up going into some sort of range that we don't quite know exactly where it is. That's why I said oil. It's kind of the hardest, it's kind of the most difficult out of all three of these because we just simply don't know enough of it yet. We have to wait and see what we're going to get. There's a good chance if this thing pulls back here, we go into that some sort of range here. And if that's the case, we want to focus on buying underneath those lows. So let's talk about that plan here right now. If we do get that pullback, I mentioned earlier, I really like the look of this channel. I really like the look. If we draw this channel up here again, right off of those lows, I like the look of that, right, of that channel. It's pretty much just a strong support trend line. I wouldn't mind buying off that support trend line. The problem is though, is that typically when you see a market reject like that, typically this market will have one thing on its mind, and then it's to go back and retest those lows. So if we do pull back, what you really want to be looking for is that 32.67 area, and I'll talk about my favorite setups to accomplish that in a moment. But maybe you're wondering, can I buy the low? Can I buy this support trend line? It's a very bullish market, and the answer is definitely you can. But you've got to remember, you've got a lot of resistance here overhead, and you're not going to have a lot of buyers that are going to be too keen on this. It's going to be difficult to attract buyers to buy that shallow pullback, especially since we have no confirmation of this breakout, right? It'll be seen as rejection, as I mentioned earlier. So what's the easiest way for me to participate in this, but still give myself kind of the benefit of the doubt, right? I'm looking for a trap pattern. So as we go lower, one pattern I would not mind taking at all is a 1, a 2, and a trap off of this low. Now, what this is going to do is there's a lot of power in this pattern. The first of all is it's going to allow the bears to really get short, right? It allow the bears, who we think will start calling tops here if it rejects off the high, it allows those bears to kind of swing and miss a couple times. It allows them to dig that hole for themselves, right, before you get that buy to run them out of the market. These are called trap setups, right? We're looking for traps here because you want to avoid buying into that high. Trap patterns are my go-to setups when I'm trying to avoid something, right? I'm avoiding overhead resistance. I'm avoiding support levels underneath. That is definitely a setup I'm looking forward to here tomorrow on the shallow pullback. Now, on the deeper pullback, this is where the bread and butter is, right? This is where the bread and butter is tomorrow, 32.67. Assume this is one big range right there, right? Just assume now that's one big range. So we make that big, deep pullback now, right? Now, that deep pullback, what's going to happen is all the bears out there, they're going to start thinking this is a bear market, right? They're going to see this thing collapse off the high. They're going to start thinking, all right, we're bearish, and they'll probably come in and try to sell either off the moving average, right? Or maybe even more importantly here, we may get a chance here to grab it off of that underbelly of that trend line. It really doesn't matter where, but again, the most important thing in my eyes is at least down to that 32.67, because that's the bullseye for those sellers. As the market comes down now, anticipate those bears coming in, trying to get short off the moving average, and we can start looking for those buying opportunities now into stops, right? Buying into stops, and then don't forget, right, that pullback pattern here coming in afterwards, right? So we call these seller failures, right? It's basically a failure pattern. It's a seller failure into a bullish pullback setup, and our target at that point is going back up, right, to retest that high. Now, there is possibility that when things get knocked off the high, it really shoots lower, right? So if it really collapses down, if we really see a lot of momentum going lower here, I will then switch to more of a nested failure as well. These are useful whenever you're concerned about momentum. These definitely take a little bit more experience, and we'll talk more about that tomorrow in our trade room as far as the difference between when we'd use a regular failure and when we would use a nested failure as well. I'll see you guys tomorrow morning in the trade room, and we'll really make sure we hone in on which of those patterns will work best for the momentum pullback that we're seeing at that time. And of course, last but not least, how do I sell this market right now? How do I be a bear on this? Well, I'm at a major turning point, and I'm bullish. So one option would be a crown reversal. We go up, we see buyers try once, we see buyers try twice. This would be a it's counter trend, so it's not going to be as reliable as a trend following pattern as we've talked about already. But this is definitely going to be my favorite of all of the reversal patterns here right now. It's going in again off a major turning point, right? Don't confuse this pattern. You want to make sure you take these at major turning points, at the measured move, right? At the high of it. We may also see it go up to the high of that channel, right? Channel comes in, one try, pull back, two try. that would be a crown reversal pattern there, right? So crown reversal off the high, that is definitely the most aggressive way to get short tomorrow. The more reliable way to get short is to wait for that deep pullback, wait for that test of the moving average, and then look for that jump off the moving average. What do we call that? We call that a 1, 2, 3 reversal. 1, 2, 3 reversal. Then let's mark up that low. You got it. Mark up that high. And now we know exactly where we want to be selling. Now, I know what you're thinking. Why don't we sell that first pullback? Well, the same reason why you don't sell that pullback. Simple as that, right? You don't sell that pullback. You don't sell the first pullback. It's not a bear market yet. Right? The bears have to hold it and run it. If they hold it and run it, go for it, right? Now we're good to go. I will gladly sell that next one. Right? The problem is, though, you cannot trust that first pullback. That one, right, they get a pretty good bounce off it, but you see buyers were waiting right there to buy right into stops, and the market slaps right back up to retest the high. So a lot of this has to do with, do we get acceptance? Do we get rejection? Where does that leave us for tomorrow? Got a big day coming tomorrow. Big Thursday session, and of course, we'll break this down into more detail in our trade room tomorrow morning. Let's keep going, though. Got the oil looking pretty good here. How about some S&P? So S&P here, what's the plan on the E-mini? Now, like I mentioned earlier, right, we got a lot more information to work with on the other markets. You can see an example of that right now. The S&P is very similar to oil, but I think we already have a much better, we have a much clearer vision on the components of this market. You can see that range right in front of you. We don't have the luxury of that information on the oil market, probably because it was relatively low volume on oil today. So what do we know about the S&P? We know we're bullish, that's for sure. We can definitely see that range right now, and you can easily see that strong move up, that pull back, and we're right there. We're right there. So there's no question about direction right now. The question is do we trust this, right? Do they get acceptance or do they get rejection? And again, what I mean by that is acceptance means, do the buyers accept those higher prices? Do they accept paying that higher price? You go to the movie theater, they jacked up prices by 15%. Do you accept that new cost? Do you buy your ticket? Right? You go to your auto dealership, right? The car salesman says, no, the prices went up. And you go, okay, I'm not going to buy the car. You reject that price of that car, right? You accepting the price? Do you reject it? That's the idea, right, behind this area. So strong move up, pull back. We know where they're trying to go. They're trying to either go higher or they'll pull back here, right, on this as a range. That's the basic components here of this market. So at this point, you already kind of know the basic groundworks as we talked about on oil. It really kind of comes down to, do we keep going higher? I think the only thing that I'm worried about going higher is that measured move you see just hanging out overhead, right? Up around that 29.88 area. Now you'll notice I've got this measured leg drawn up off of that low. This is definitely borrowed from the old Elliott wave 1, 2, 3, 4, 5, right? So think about this as wave 1, wave 2, wave 3, 4, and 5. So if we assume that wave 1 is equal to wave 5, and I'm generalizing this obviously just for easy sake here, but typically in most situations that 1 is equal to 5. Now sometimes what happens is they end up using the whole darn thing, right? So sometimes they make the whole measurement and it ends up going all the way up, right? So this thing really gets cuckoo tomorrow, right? If they really start, right, chugging the Kool-Aid tomorrow, don't be surprised if we do see a run above, right? My biggest concern, though, for tomorrow, though, is can we get through that measured move and also, too, through that big round number. I get a bunch of milestones here. If we really let it rip, though, which does seem a little bit unrealistic back-to-back days like that, but if they do, that 30.22 level, again, I wouldn't go banking on that number for tomorrow just yet, but it's out there and it is definitely possible. My biggest concern is if we roll higher here, what's my plan if we run into some resistance up there? I've got this trend line drawn in off the channel as well, so there's a lot of concern up here. I know we're bullish, there's no doubt about that, but I'm just worried about buying too high here right now. So I think the biggest thing here, right, for the breakouts, it's very similar, obviously, right, to the oil market I mentioned earlier. If we do see that breakout, For example, one thing would be, let me get these areas off of here right now, right? If we do see that breakout going higher, a 2-try trap is really the best pattern for a quick entry on the way higher here. Right? So imagine now we break out higher, we start ripping higher here overnight. We know where that measured move is. That's not the question here. The question is, right, do I want to buy aggressively into what could easily be the top of a channel? And the answer is I'll gladly do it as long as I can get a strong move up, a shallow pullback, a higher high, and that 2-try trap pattern. Again, we talk about these trap patterns nonstop in that free trading course that I mentioned earlier. And again, I'll put all the information for you guys in the description of this YouTube video. So that will be a 2-try trap. Now they can make this thing a whole lot easier on us with a 1, 2, 3 breakout. I mean, this will be a whole lot easier if they just come in and blast off that moving average. If we see this thing, right, jump up, pull back, and then go, as if to say, what measured move? I didn't see a measured move. Did you? Right? That's that type of mindset in the market. Once that happens now we know where they're trying to go. Their next milestone is that big, juicy, tasty round number at 3,000. You got to love that one. Find that new hidden channel, and we're buying off the low of that hidden channel. Very similar to what we talked about on the oil, right? Now, with that said, that big round number up there and that measured move, I wouldn't be surprised if it ran up and somewhere up here, right, whether it be the measured move or it be that round number, we jump up and we start going sideways. Eventually these buyers will sober up a little bit and realize, right, how high they are on this chart. As I mentioned yesterday or earlier in this video, all it takes tomorrow is a little sniffle of any of the topics we talked about in the introduction to make this market stall out. So if they do stall out like that, just keep your eyes open under that range and just wait for that pullback. Now, once that pullback is there, I'm not trying to predict that bottom. Right? I'm never trying to guess which of these are the low. Okay, that's a rookie's game. We don't want to predict. We don't want to guess. I want to give myself a better chance of success. So instead of trying to predict or guess that bottom, I'm just simply wait for those bears to come in and try to sell on that pullback. Once they do, now I know where stops are, and I can buy right into those stop losses, right? Heck with picking bottoms, right? Picking bottoms is not going to get you where you're trying to go. You want to wait for that seller to come in, wait for them to get in short, and then buy right into those stop losses. One of the easiest ways to make a buck in the financial markets. And again, right, it'll give you a nice low risk, high reward opportunity. Those are the key, right? That's the key. Where can I get in at a support level so I can risk small to earn large, right? None of this going for 1 point, risking 4 or 5 points, right? Nonsense that we see all over the internet these days, right? Real traders can't trade that way. You can't feed your kids that way. So we know what we're looking at as we go for a breakout. Now, as we go lower, now you guys know, right? If we end up back in this range, what do? We sit on hands, right? We don't do anything inside of that range here. Unlike oil, I really don't have a lot of space on a pullback, right? To be able to buy here, you've really got to, that same trap pattern that we talked about on oil. Remember how oil had that rising support trend line and I talked about getting long off of it? That's not the same deal here on the S&P. That will be a whole lot less desirable trade because where's your risk reward? There isn't anything. You have to assume the market's going to go higher. On the oil market, I can get a good risk reward ratio still buying off the low of that channel. So what I really got to do is I got to get a deep pullback. I need to see a much deeper pullback here off of these highs. Now, whenever I think about buying a pullback, I think about let's find some levels of support that I can use. Like I said earlier, we have the luxury of knowing where that range is right now, which means I can go out and measure the amount above. I can project the amount below. And I'll tell you, if you watch this newsletter every evening, we know how well these pendulum swings work, right? So once we know where that range is now I can measure it and I can find that pendulum swing. So this area down here, 29.48, is a very, very powerful area for me tomorrow. Combine that along with this trend line support coming down. You can see I've got this resistance line, right? This trend line support. This trend line support combined with that pendulum swing, That's the sweet spot right there for tomorrow. If you look left too, you can also see it's almost like a little doji range right there, right? So really anything underneath this low, just like on oil, get underneath that major low. Anything really underneath that low, and I'm starting to look really good here to be a buyer. Now, as the market pulls back, right? As the market pulls back on this, remember, if it stalls out inside the range here, that's going to absorb a lot of the bearish momentum. So when I make a run going lower now it's not as bearish as it was before, and I can look for a seller failure into a bullish pullback and go right back up into that range again, right? I can look for those failure patterns into pullback pattern combinations that we love so much in our trade room, right? I can grab those if the big if is if it stalls out in the range. But if it just takes off the downside here, right, now you've got that high and that rolling over now. Now those bears are going to have a lot more energy behind them, and you'll want to make sure you give them, right, the benefit of the doubt here in those situations now. And again, this is where it's going to, a lot of this will really have to kind of wait and see how it looks in the pullback. Does it pull back to that trend line? If it pulls back to the trend line, that momentum's probably not going to be that strong, right? As long as I'm avoiding buying into the range, I can be pretty confident they're buying that seller failure pattern off of that trend line, which is a great spot. But what really make me happy is if this thing just puked, comes all the way back down into my pendulum swing zone, the problem is that's going to get a lot of bears excited. And so they're going to try once, they'll try twice. And my favorite setup is those nested failures to sell after those bears try twice. Now remember, those nested failures, they almost always rip. I mean, they really rip hard because what happens is the bears are all in. The bears are all in. They're all trapped. And so once those bears fail, the market just usually races right higher. Because of that, whenever I see a really deep pullback like this, I always look for that little trap pattern, that little two-try trap. It's one of my favorite little follow-ups after we see a nested failure. So again, a lot of this has to do with how we pull back off of that high. What does that pullback feel like? Is it the market dumping, or is it stair-stepping its way down? That will really help us plan which type of entry we'll use here for tomorrow. And obviously tomorrow morning in the trade room, we'll do all of this together. We'll have a front row seat. We can get some dirt under our nails tomorrow morning on the charts here together. Now, could I sell this market in the S&P? How do we sell this thing going forward here? Well, first of all, if I want to trade a reversal, I've got to be at a turning point. So I do want to sell it now. I've got to be up, and then I can start watching for those reversals. Now, there's a couple ways to do it. My favorite way to go against a strong trend like this, again, assuming that you're at a major turning point. Once we get the turning point now, look for rejection, right? That's the first thing. We don't want to see it continue to go through it. Look for rejection. What will happen is those buyers will come in. They'll try to buy it again. Right? And when they fail now you know what's going to happen. Now you're going to have sellers camping out right above that high, right? All the bears now, they're going to see, first of all, rejection. They're going to see those buyers trying once and failing. And what's going to happen now is all those bears now are going to start stacking their orders. Sell, 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 sell. And they'll try to call that top. And that's the most reliable pattern, right, that I know to trade against the trend, right? I want to go up, minimum double top, right, or ideal trap high there. We call these crown reversal patterns up off of that high. Now, there is other options on this, right? And we'll talk more about that tomorrow morning, right, in the trade room. There are other options, right, like nested failures that are drawn out. So we'll talk more details on those kind of finer tuned setups tomorrow morning in the trade room. But be aware, right, that crown reversal will be the go-to if we can get our hands on it. As always, though, right, I do want to keep in mind here, too, if we do go back into the range here. Let's say we go back into that range and we chill out here for a little while, right? If we hang out inside that range for a while now momentum isn't as scary any longer. And so now I can jump up, and now I can definitely use that nested, right? That one try for the bulls, that two try for the bulls, draw that trend line over. I can definitely start to get more comfortable with the idea of a buyer failure pattern, not so much a crown reversal pattern, but a buyer failure if we can get dragged down down into that trading range. I think that makes sense, right? The momentum is neutralized at that point, and therefore I can be more aggressive being a seller. Still a bull market, so I still have to be careful, wait for those buyers to try a couple times, but I can definitely be more confident though. Keep in mind, that is a very different trade, right, than having it go straight up here, right, to the high. That's a very different sentiment in the market, and that's why I've got to be more conservative, right? More protectionary on that trade off the high here. Then obviously reversals. Reversals are a big part of this plan because we may see these guys reject off that high. First of all, strong move down. We got to get some momentum to be a bear here. Momentum, of course, leads to the moving average coming over. The bears come in. They get short off the moving average. Again, why not sell that one? Well, if you're going to sell that one, then you got to sell this one too. Right? If you're going to sell that one, you got to sell this one too. And as you can see, they are not very reliable, not in a bull market. So I personally stay away from those. You're more than welcome to gamble on predicting things. I'm not in the prediction business. I'm in the reacting business and finding high quality setups. So once I see that 1, 2, 3 reversal, now what I'll do is now I know momentum's there. There's no more bulls in the market any longer. And now I know where I can get short up off of that high. We call those 1, 2, 3 reversals into hidden channel pullbacks. The objective at that point, oh my goodness, there's so much open space down here. That 2908 area, right? That's the low from today, I guess you could say, right? That low from today, 2908.62, 2908 and 3/4. And then if you really want to see, if you really want to keep the bulls up at night, right? This trend line here is a very scary trend line because if they can't, obviously this is probably not going to happen tomorrow, but if those bears were to take control of this, right? They've got one thing on their mind, and that is to get right back down to that low. If the shouting match becomes a shoving match in the U.S. and China, if stimulus plans hit the bricks, right? If the vaccine turns out to be just some sugar pill, right? This could easily fall apart here. All of this is really riding on the idea that we're going to get back to normal. If the news comes out at all tomorrow that suggests that may change, be ready for a sharp reversal. I can't predict it, right? It's foolish to try to predict it, but I definitely can anticipate it and then trade it correctly from there. All right, how am I doing so far? Any questions? I know you got questions. If you got any questions for me, drop those questions in the comment section below. What's your favorite setup so far? Is there one setup on the video so far that you really look forward to tomorrow? Drop me a comment in the comment section below. I'm trying to make sure I do more of what you guys love. So obviously hit that thumbs up button for me obviously too, but drop me some comments in the comment section here. Which of these patterns do you like the most? What would you like me to skip next time? I'm always trying to make this a great video for you, so I want to embrace the idea of getting your feedback here. Now, wrapping things up here now on the gold, the yellow metal. Boy, I'll tell you, I was expecting to see a move right back down to those lows today, and you can definitely see we did not get that, right? In fact, we didn't get much at all. If you take away the rest of the chart, I mean, we literally that was our range, right? That was our range here. We're obviously bullish at this point. Last night, I talked a little bit of smack to the bulls. I said that this is not a bull market, but now tonight they've held, right? They've accepted this higher price, right? If we would have had this as a bear flag, as it looked yesterday, it would have come right back down again. Or we would have made some significant progress going lower. The buyers have defended it. The bears have defended it. The bulls have earned my trust here now. We'll see if they keep the market tomorrow. But this is definitely, at this point now, it's a bull market. It is, unfortunately. And this is what I mean last night by, if I'm wrong, I'm wrong. If you're wrong on the sentiment, it's okay. You're going to find out, right? It's okay being wrong. Now we know buyers have held. And with the buyers holding, we know we have a what looks to be like a trading range. Now, it's not the prettiest thing in the world. It looks like this range is right up here. That's what it looks like, right? That was the beginning of the session. One of the many tricks we talk about in our trade room is how to find the right range. Go back to the very beginning of the session. That's usually where the story comes together. Once we know we have the range, buyers are buying low, buyers are buying low. And you can see they're doing it all over those trend lines, right? Those little trend lines, those areas of support. So it's a bull market, right? It's into a range right now. I'm looking to be a buyer down at support levels here. I think the most important information on this chart right now is right there. Those highs and those lows. You can almost guarantee there are buyers waiting right below those lows, and there are sellers waiting right above those highs. Now, we know we have bullish, we're bullish in momentum right now. We're more bullish than we are bearish from what I can tell. So I definitely would rather be a buyer instead of a seller, but we'll talk about both sides here, right, as we always do. So looking to be a buyer here off those lows. I really want to get underneath this area at 44, right? 44, really down to that prior high at 41. Combine that trend line there. Yeah, now we're talking. That's a great spot I'm looking for here tomorrow. On top of that, you can see my measured move calculation off of that high here as well. This is a great spot. It's a great spot, that 1744 to 41 block there. That is definitely going to be where we want to keep our eyes open here for tomorrow. Knowing that, I'm looking for what should be a pretty straightforward move lower, get down underneath that low, right? Get down underneath that low. Now, you go back to oil, and we talked about how on oil there might be a trend line here. You know what I mean? There could be a channel up there, right? I don't think it's that important on this one, but at the same time, there could be a trend line here. So if you want to get real aggressive on this, you could look for that trap setup, right? If you really want to be aggressive on that. This is the same idea that we talked about on oil here. It's still got enough space for it. There's enough space, right? But this is a very aggressive setup. It's a one contract flyer, as I call it, right? One contract, let it fly. It's basically risk capital, right? It's a gamble setup off of that low. What I'd rather do is I'd rather get down to this low personally. I'd rather get down to this low, get underneath some of these lows here, get these bears thinking this thing has reversed, get them selling into that moving average. Now I know exactly where their stops are. Now I know exactly where their pain points are, and I can wait to buy right into their failure. I'm not trying to pick that bottom, right? That's very difficult to pick the bottom. I'd rather buy into those stop losses because that's where the fuse gets lit, right? That's where the gasoline gets poured on top and it jumps higher. Then what I'm looking for is that pullback, right, as we go higher. That seller failure into that bullish pullback pattern. Now, as I mentioned earlier, I believe it was on the S&P, if it really starts to take off the downside now that momentum becomes a big problem. And now, instead of becoming very aggressive on it, now I shift my focus to be more conservative. I'm not trying to be a seller yet because they haven't held the pullback yet, but I'm definitely looking for now what I call a nested failure. And remember, those nested failures, what you're doing is you're embracing the idea, I still want to be a buyer, but you know that momentum is going to cause a lot of trouble. One try for the bears, two try for the bears. You're literally buying right into those stop losses the second time they try, right? A little bit different way of looking at the chart, right? Now, another thing you want to keep in mind too is oftentimes that price will rip, right? Like I mentioned earlier, if we get a deep pullback like that rip, we can now look for that trap low, that moving average come over. Remember, it'll usually be a shallow pullback, a higher high, a trap low there. It's a nested failure, right? And a trap setup, right? Two try trap pattern. Where's my target? Target, of course, is back up, right, to retest those highs. That is what I would like to see, right, for us here tomorrow. At the same time, though, got to be ready for a breakout. I would definitely encourage you to be ready for a breakout. If this market can break higher, right, again, got to be above this 57.7 area. If these buyers can, or if they can knock out these bears right now, there is a nice juicy open space up here up to that 1773.4. That's the big high from, was that early this week? Yeah, brand new this week, right? From Monday this week here. So Monday's high up there at 1775.9. That is the trophy for the buyers here. We'll see if they can put the meat on the deck for tomorrow. One would be a strong move up, a pullback to the moving average, and a jump through the EMA, right? We call that 1, 2, 3 breakout into hidden channel pullback. Another option would be we rip higher. We get that what's called a two-try trap pattern, right? Shallow pullback, higher high, two-try trap pattern. And keep in mind too, it wouldn't surprise me if the market jumps up, starts to trade a little bit sideways off that triangle high I've got drawn on here. That creates a spike in channel. Spike in channels tell me to look for the base of that channel, and we're buying that pullback off the base of the channel. We'll obviously know more about that tomorrow once we get our hands dirty together in the trade room, right? That'll be later on in the session there for tomorrow. So keep an eye on that. And keep in mind too, right, if we don't get the deep pullback and we don't get a breakout, if it goes sideways here, just sit tight. Just sit tight. Wait for the price to pull back. Wait for it to run lower. Bears come in, try to sell it. We'll keep on buying right into those stop losses using that range as the magnet that it really is. Now, how do I sell this market? Same old, right? We go up, crown reversal. The crown reversal is not a bad idea in this environment because there are probably just as many bears overhead as there are bulls underneath. So crown reversal is definitely an option here on this gold, right? One try for the buyers, two try. I remember that earlier, right? Once the buyers get rejected and they get rejected again, now you're going to see bears swarm that area up there. Double top, trap high for that move back down. We call those crown reversals. We talk more about those in the video course. And then obviously a 1, 2, 3 reversal, strong move down, a pullback to the moving average, and a jump off the EMA, mark up that low, mark up that high, and we're selling off the high of that channel. Where's my target for that? Back down to retest that low. Get a nice, easy target for those bears. So bears want to get back to retest yesterday's low. The bulls want to get back up to retest the Monday low, or the Monday high, I should say. Meanwhile, we're hanging out on the weekend gap, and of course, tomorrow being really the last full day of the session before a holiday weekend, we got some work to do here tomorrow in the trade room. Like I mentioned earlier, I'm pretty excited about tomorrow's trading session. I hope I'll see you there with me. We get together every morning, 8 o'clock Eastern time, like clockwork, Monday through Friday. We've been doing it every morning like this for over 12 years here at School of Trade. I can't believe it. 2008, we opened up our trade room for the first time, right? If that doesn't deserve a thumbs up in the video, I don't know what does. But make sure you grab that link to get registered for tomorrow. I don't want you to miss tomorrow morning's trading session. So get registered. Don't be afraid to call me in the office if you have any questions about anything we talk about tonight on the video. I got live support on the right-hand side. And as always, if membership isn't quite right for you, make sure you grab our free trading classes as part of our free trial. And I'll see you guys on our video courses here at School of Trade. Guys and gals, thank you so much for being here. I'll be back tomorrow morning, right, 8 o'clock Eastern time in our trade room. If not, come back and see me tomorrow night on the next edition of this nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.